What if I told you that the bank never gave you money? It simply recorded a number. And what if I told you that the entire banking system runs on bookkeeping entries built on your signature? Now, people think that banks use cash as vaults, but the reality is that they don't. They use accounting. They are literally typing numbers into a computer and making you think that that is real money, but the reality is it's all digital. Everything is digital. But the growing theme on this channel is the fact that I will bring the economic truth, but I will also help you guys understand the legal truth and the reality and how to be able to use it. The economic truth is to help you understand the system, and me giving you the legal reality so that you can take some actionable steps. So make sure you stick around all the way to the end to be able to get this game. This is not financial advice. This is not legal advice. This is not tax advice. Remember to do your due diligence, okay? I also won't give that advice. I'm just going to educate you, and it's up to you to do the work required so that you can be able to get ahead, okay? And number 2, hit the like button, hit the subscribe button, tap into the channel. We're doing a 5-part series on essentially lawful consideration, essentially the value in exchange in banks, and how to be able to use that to your advantage. So if you want to be a part of that journey, watch this series all the way through, okay? Thank y'all for watching the video. Let's dive into another one. So one of the things that I want to talk about is the fact that the Federal Reserve admits that the banks don't actually lend money. In Modern Money Mechanics, which is the book about money in banks, okay? And you can easily just do a Google search and you can find Modern Money Mechanics. So this is not something that is just like beneath the veil, behind the curtain. No, it says in this book here that banks don't lend deposits, they create credit on their books, okay? It also breaks down the definition of money, okay? This right here is a doctrine specifically from the bank, okay? This is a legal doctrine that has this information on there. So everything that I'm saying is all legal. So when you are bringing up this information to them and they try to claim that you are doing something fraudulent, that is a fraud within itself. Saying that I am lying about something that is on a legal doctrine is just a blatant lie. It will be illegal to lie about something that is legal, okay? And then when you look at the Bank of England, on the quarterly bulletin, it said that 90% of money is created by commercial banks when they issue loans. Okay? I just have it here in my notes, but I pulled it up so you guys can look it up on your own. Okay? Money in the modern economy, money creation in the modern economy, the court of the Bank of England, dealing with the banking crisis, the role of business model analysis. I mean, all of this is important if they truly want to know, like, is this system like what Nicholas, what they say it is? How can I understand this? So what I'm talking about is not a conspiracy, okay? It's just central banking policy. It's the reality. It's the policy. So this is why we are on this track of challenging banks. This is why I even create content like this, because I became obsessed with the fact that, we was being bullshitted our entire lives. And I wanted to be able to understand it. The more I understood it, the more my approach became stoic when it came to business. The more I started to truly be okay with and accept life for what it is. That's the whole point of understanding. To be more conscious about the life that you are living, the system that you are a part of. And then when you do that, you don't typically like fret about certain things like politics and government, you know what I mean? And not to say that those things don't hold some level of weight, but the reality is that, whatever you perceive your life to be, is going to determine your happiness. And that's what it's all about. Okay. Now that we pretty much broke down the law and really some legal doctrine that you can go look on your own, before we dive into this double entry trick and how money appears, let's first talk about the Fund Yourself Academy. The Fund Yourself Academy essentially is put together for you, okay? It's put together so that one could be able to join a community, be able to get courses, resources, be able to get the step-by-step process on how to be able to challenge debt, deal with contracts, understand the elements of discharging debt, understanding the elements of consumer law, and be able to use it to your advantage so they can be able to position themselves to fund themselves. The Fund Yourself Academy, we have reached 1K members, and you can tap into the community for only 27 bucks a month, okay? And this is valid until Christmas Day. After Christmas Day, it's gonna go up, okay? I said when I reach my mark of 1K, we was gonna bring the price up, but it'll be this way until Christmas. So tap into the Fund Yourself Academy if you haven't already, okay? It's a community. We're very active and communicatory in there. And I also pair workbooks with my YouTube videos. So for the people that do watch my videos and feel like, hey, I just need that extra, self-taught lesson, or, I want to be able to tap into a community, be able to ask questions and DM Nicholas directly, tap into the school community. Now, let's talk about the double entry bookkeeping and what is this reverse liability, mirror liability that they keep creating, okay? And this is how they move. When you sign that promissory note, okay, as a matter of fact, I have a diagram I'll pull up for you guys real quick. When you sign that note, okay, the bank then creates an asset on its books, which is your promise. The bank then creates a matching liability to you, which is what they will call the loan amount. And then you spend the liability while they keep the asset. This is the reality of banking. This is the part that is happening. They don't tell you about them recording it as an asset, but they do tell you that you borrow money, the bank lends cash, and then the seller gets paid. And that is it. But the reality is there's a lot of other things that are happening behind the scenes. You dig what I'm saying? The loan is the fact that they are, this is the problem right here. The fact that they are not really creating an asset. The asset is already deposited. They just create a matching liability, keeping the asset. Instead of them balancing out this asset, the Federal Reserve balances out the asset or clears it out. Okay? They then keep the asset and sell it through Wall Street. That's called securitization. And the investors then trade it as mortgage-backed securities, okay? Because all of this is happening and this is not happening, this lack of disclosure right here is a problem, okay? It is a problem. So if we go to 12 CFR section 204, okay? It breaks down the definition of deposit. It says the deposit is an unpaid balance of money or its equivalent received or held by a depository institution. Okay. It also says that loan amounts are recorded as liabilities and not as the bank's money. Okay. The GAAP, which is the General Accounting Principles, says that loans are recorded as receivables, not expenditures. So here's the thing that you have to get. They didn't give you money. They gave you a claim on a bookkeeping entry. A claim is someone claiming that it's just somebody claiming that you owe them or something, claiming something of you, claiming an obligation, but you funded it with your signature. They created a bookkeeping entry with your funded signature, okay? This violates traditional consideration principles because under the restatement of contracts essentially says that a contract requires real value. So that means it has to be tangible, okay? Also under UCC 3-302, it says that the banks must give value to qualify to be a holder in due course. Now, you could be a servicer and not the holder in due course. This is where it becomes an advantage of you to be able to send them a conditional acceptance, asking them to see if they are the holder in due course according to UCC 3-302. And if they aren't, under UCC 3-305, you have the ability to be able to challenge anybody who says that you owe them when they cannot prove that they are the holder in due course. If them being the holder in due course is in question, then you have a right to defend yourself against that. Okay? And then we can also go to UCC 3-308. Okay? UCC 3-308, okay, talks about value and consideration. Okay? UCC 3-308 essentially is saying that a value must be performed, delivered, or risk in order for it to be considered value. So we can argue that they potentially perform. We can argue that they may have delivered or whatever the case may be, but we can argue that they never risk anything. And they have risk factors, but what would be the point of them having risk factors if they are going to not use their own risk? The reality is that the banks risk nothing. Okay? it just records numbers. Because they risk nothing, they just record numbers. It's no value in consideration, is what we can argue. Okay? So, was it lawful consideration? Or was it just a contractual illusion that the system agrees to? Now, let's just talk about the economic reality versus the legal recognition, okay? This is the two worlds blended together. And again, we're going to help you guys understand this so that you don't get emotional about it, so that you understand it, so that you can actually just say, you know what? If it's something I need to take on the chin, I'm going to take it on the chin, okay? Here's the true sovereign lesson, okay? Understanding that economic truth and legal truth, they're not equal, okay? Okay. The system doesn't operate based on what is real. It operates based on what is recognized. The system is a game in the real world. And when I'm talking about the real world, like if there was no government, it was no money, right? This is just a piece of paper. This is not even real value. It only works because this system, okay? So to show you guys the distinction, the economic truth is exactly what I show you guys. The fact that the borrower funds the transaction based off of this diagram that I just showed you. Okay, this is the economic truth right here. Okay, the legal truth is that the bank is treated as a lender because of records and statute, but not because of this here. Okay, here's the key. You may understand this, but you can. It's not that the courts are just going to recognize it as this. You can still use this to your advantage, the economic truth to your advantage, but it's when you challenge their records and the structure. So the economic truth is that you fund the transaction. The legal truth is that the bank is treated as a lender because of how they structure their business and their records. And the commercial truth is that the instrument, your note, is actually an asset. It's a bankable value. It's a financial instrument. Okay? So two truths can exist at once. Okay? And that's okay. So if you bring up those records and structure into question, then you could be able to stop the madness. Okay? So, bank consideration, is it a legal fiction? Yes, it is, but it's recognized, okay? It's recognized by the banks, okay? The courts won't call it fraud because the structure is lawful. If the structure is set up properly, then they'll call their credit creation lawful consideration. So, when you look at UCC 1-304, it talks about the obligation of good faith, okay? Every contract or duty within the Uniform Commercial Code imposes a obligation of good faith in its performance and enforcement, okay? And you can really dive in deeper, in the definition, but long story short, when you're thinking of good faith, let me see if it's right here. Control F, good faith means honesty in fact in the observance of reasonable commercial standards of fair dealing. And I'll do a separate video on the importance of good faith. But when they aren't moving in good faith or not acting within a recognized commercial practice, then now we have a case. Then we got a UCC 1-103, which the law recognizes long-standing commercial norms, okay? And also at the same time that equity supplements the Uniform Commercial Code when the UCC is exhausted, okay? So you have to use the UCC first. And the Truth in Lending Act and regulation, it mandates disclosure, but not economic purity. The system recognizes structure, not emotion. So in that element, understanding these things that, when those things do not align, okay? Even though we're asking for them to provide the truth, that's not the argument. Okay? So stop trying to, make it about, purifying the economy or rebelling against the system. Actually try to get clarity. And when you try to get clarity and they don't give you clarity, then that right there would be them not moving in good faith, which is a direct violation of their duties. Okay? So one case showing loans aren't as they appear, which is Thorne versus Bank of America. Okay? So in this very law, okay? No, where is he? No, this is not it. Why can't I find it? Okay. In Thorne versus Bank of America, the court noted that banks create credit, but dismissed the borrower's claims because the system recognizes the structure. They essentially said that it wasn't fraud, it's not a loophole, just dual realities, okay? So The case proved that loans aren't what they appear, but it's not that you can use that as your primary argument, okay? So they affirm that they create credit, okay? So here's how to use this knowledge lawfully, okay? Make sure you got your notebook real quick, all right? You don't want to screen fraud. You want to use their structure against them with documentation and law, all right? So here's what you can challenge. You can challenge the consideration under restatement section 71, like I stated in my last video, because consideration is important when it comes to law. You're not necessarily screaming fraud, but they have to prove that there was some true consideration, all right? Along with the consideration is the fact that they are moving in good faith, the fact that they are giving meaningful disclosures, and all the disclosures, not only the fact that they have loaned you money, okay? Number 2 is disclosures under the Truth in Lending Act. You can challenge their disclosures. You can challenge them to provide certain disclosures under the Truth in Lending Act, okay? Again, they can provide this stuff, but that is the thing. Until they provide it, you don't have to move a thing. You don't have to move a muscle. You have a right to challenge. Number 3, you can ask for an asset chain of title under UCC 3-201 or the UCC 3-203. That is challenging whether they are the holder in due course, challenging whether they have the ability to, if they are in full ownership. You can challenge whether there was value given under UCC 3-308. And then lastly, under the holder in due course, UCC 3-302, it explains what the holder in due course is, okay? So you can challenge them on that too. You fight structure with structure. When you start asking them about their structure, you start asking them about their documentation, you start asking them about these proofs, more than likely they're not going to provide it. If they do, great. You just bought yourself a lot of time, okay? But most times they don't. If you do not do this, you cannot, go in there hoping to win. If you're not sitting there trying to squeeze everything out of them, you know what I mean? You want them to make a mistake. That's why you want them to ask. If they provide it, then you just continue to pay like how you was paying, or you negotiate different terms. I'm sure they'll be willing to negotiate different terms with you instead of you still sending them letters and challenging them on the consideration. I'm sure they will prefer that. So be okay with that. Now that you guys understand what is going on behind the veil, now that y'all understand what is going on behind the scenes, why we are even challenging consideration and how to properly challenge consideration, what laws that are actually going to help you. In episode 3, we're going to dissect consideration itself, what it is and what it isn't, and how to challenge it without getting shut down. So make sure you guys are tapping into the Fund Yourself Academy on school, okay? Because if you're ready to stop reacting and start structuring, then you need to make sure to watch all of my episodes, okay? This is episode 2 to a 5-part series that's going to wrap up on Friday. So make sure to hit the like button, turn on those post notifications. Make sure to stay tapped into the community because we are going to post bangers all week. Thank y'all for watching the video. If you gotten this far, comment the word consideration, and I'll see you in the next one.